Are you transforming into the person that you need to be with this skill set? The answer will be yes, you are. Grand evening, Royals, and welcome back. Hi, I'm Leslie Sampson, aka Mr. Pipillionaire, and today I want to talk to you about trade management. Sorry for the rasp in my voice, but I was a little bit ill over the past couple of days. So let's talk about trade management here. Now, if you have been following some of my content, you would realize that I've been utilizing a method and system from a really good institute, and I have been working towards being an independent professional trader, which is of course what they teach at the institute. Now, it takes some time to get this skill understood. However, once it is you understand the dynamics of the skill set, which is the art of professional trading, this is something that you can take with you anywhere in the world for the rest of your life. All right. So trade management, why do I want to speak on this topic? Well, in my previous videos, or if you have been following me, you would realize that I've been just incrementally showing some data for how it is I go about or how I approach the markets itself. So of course you can feel free to look at that content. By the way, my main website is at pipillionaire.com, and this is where I will be sharing some key insights, not really specifically for trading. It's about blockchain technology. However, this skill set can transition from just the financial markets in forex or metals or commodities. This goes on to or into blockchain technology. So this is where we're going to be utilizing the skill set as well too. So surely follow me for more insights where that is concerned. All right. So trade management. I am looking at, well, let me go to the pairs that I would have just exited from. This is just currently in motion, right? This is EUR-NZD, and this is an idea as to what it is I may potentially be looking out for with EUR-NZD. All right, let's just get this tool here. All right, as you can see, this yellow line here is what I was estimating for price to do. So I'm planning out a trade and I'm trading the plan. Right now, what would have happened here before is that I had an idea for this position to go, let me see, I had an idea for this position to be active, but I eventually closed out this position around here. This was May the 25th, thereabouts. I would have closed out this position, I think it was somewhere around right around here, so around the 5th of June, somewhere around thereabouts. I was not seeing the structure or the volatility coming into the market at that point in time, so I closed off the position. All right, so okay, no problem. That's a great thing about the skill set, you know, it rewards the patient. All right, so no problem. I said that I would have stayed out of the market, and this is me utilizing my discipline, my obedience to my trading plan. And of course, when we are trading in the financial industry, life happens. So we also want to be able to reserve ourselves where trading is concerned, because if we are having a bad day or a bad month or some bad interactions and stuff like that, it will surely affect our decision making where applying ourselves to the charts are concerned, right? So I stayed out of the market for about a few weeks, two or 3 weeks, and now I decided to go at least continue the cycle for price to, you know, whenever price volatility comes in, it's going to go in that direction. So that is just a simple idea behind this particular trade, and we will see how this is going to turn out in the very near future, right? There's an idea that I had for two positions. It would have been a buy stop and a buy limit. So at the bottom here we have a, where is my tool? Is it hiding somewhere? Right, so we have a buy limit set at the bottom here in this position, and then we also have a buy stop which was actually triggered, right? So this buy stop is in motion, which is this, let me get this here. Where is it? Come here, you tool. My tool is acting up. right? So that's this particular position right here, right? This position is active. However, this position at the bottom here is not active just yet, but that is not a problem, right? So we were catering for a quarterly buy stop. All right, let's change this to a quarterly, right? So this was a quarterly buy limit right here, and of course we just had a buy stop set here for just in case the market was not going to come down to activate our buy limit, but the market was going to continue pushing with the volatility. So that was the idea behind these two positions. It's a twin trade. Currently it's a single trade, but simple idea, simple concept. Apply, like, do your analysis, and then you trade what you see, right? At least what it is you understand and what it is you see. So that's the idea behind EURNZD. But let's go to some trades that would have closed off, right? Let's go to this one, UCAD. Lovely lessons here, right? I would have gotten kicked out at break even, as you guys can see. These are things that happen, and we grew from these lessons, right? So whenever we lose any or get a lesson from any investment, because we don't essentially lose any money at all, right? It's a lesson. That's a cost of doing business in this industry. I've surely learned that over over so many years, right? But whenever we get a lesson, it's something to move forward with, right? So with trading, you are either going to get a percentage decrease with a lesson, or you're going to get a percentage increase with a lesson. Regardless of which lesson you get, you still have to move forward to the next trading opportunity, right? So do not be all glams and glitter when it is you are winning or you're profitable, and then you're all, down in the gutter when it is you are losing or getting your lessons, right? It's part of the system, it's part of the game. And once you understand how to actually navigate with a proper structure, you will be very, very successful, right? So as you can see here, I set this pending up at a quarterly, right? You can see the quarterly sell limit, right? That's what I set up here, and this trade was not activated, right? Because it happens very few times, right? But the quarterly point, at least with IC Markets, which is the broker that I use, it did not get triggered, right? Price literally just came 2 pips away from my entry, and it did not trigger this pending order. Or if it did, I would have been in this trade currently right now. No problem. I decided to get into the trade when I noticed that there was a pullback. I set a sell stop up, right? I set this sell stop up, and I got activated in this position here, right? This little position right here. Now price ran for roughly, let's check it. Price ran for roughly 119 pips, and then it eventually came and stopped me out. Now, why did it stop me out? If my stop loss was located up here, why was I stopped out in this particular area here? All right, my stop loss was initially up above what I perceive as an order block, right, on the daily time frame, and I moved my stop loss to break even before I noticed a proper structure to place my to move my stop loss into profit, right? So I was taken out at break even, right? I saw price moving down, right? This was a bit of the volatility here, and I decided to put my stop loss in profit, thinking that it was going to continue to potentially this low right here, and they were going to create their structure, their retail structure, and that was not the case, right? In this case, I would have put my stop loss in profit, and look at what happened. They wicked me out, literally wicked me out. And then right after they did that, which was last week Friday, they dropped roughly 141 pips, and then now they are just floating roughly around 86, 88 pips in what would have been perceived as profit. So this is just a lesson for me to understand and for you to gain insights from. whenever we are in any investment or any trade, it is not wise to always move our stop losses into profit. At least with this method and system that we use, it is not always wise to move your stop loss into profit too soon, right? How we apply that, which is something I did not do this time, is that we literally look for a proper retracement before we actually apply we place our stop loss in profit, right? Or break even, or anywhere in profit, right? In this case, we were going short, right? And that did not, I got taken out. And then this was when I should have, after this happened, this was when I should have put my stop loss here, right? And of course, if I would have gotten taken out, like for instance, price does this and then goes up and takes me out before it actually goes down, well, no problem. At least I would have followed my plan to T at that point in time. But in this case, that did not happen, and I have to live with the consequences. And of course, I'm going to move forward with what? A lesson, right? So that was a lesson for you to gain some insights from. So let's look at another pair. Let's look at a bullish pair. Which was the next bullish pair? We would look at EUR USD. This would have closed off today, and whoops, I would have executed this trade pretty nicely. Again, the great thing about this skill set is, at least one of the great things about this skill set, is being able to allow the market makers to do what they do best, which is essentially making the markets up. Once it is we understand the dynamics and the structures of what it is they are doing, let's use this, we can, 1, 2, 3, and then we could expect some kind of a retracement maybe, or in this case they can actually continue going bullish, right? I decided to close off this trade, and let's see, I closed off this trade at roughly 312 pips, right? Because I understand that EUR USD as a major pair, it can give me 300 to 400 pips, right? When the volatility sets in, like it pushes, it can give me 300 to 400 pips. It can push for 500 pips, but I am pretty much okay with getting like 300 to 400 pips, 350 pips out of any given cycle or any given level. In this case, this is a level, right? We can see 3 pushes here, 1, 2, and 3, right? They do not have to do any form of retracement. However, if they do, no problem. Guess what it is we are going to do? We are going to look to see if they are setting up any parameters to actually continue going bullish again. And what are we going to do? If we see a structure, something like this happening, we are simply going to set up ourselves for success again, right? We are going to catch the next train ride, right, with our stop losses below the low, right? And then we're going to see how that's going to play off. If they do something like that, I would prefer to see that they can come down to an order block of, in this area. And if they do, I can set a pending up and set my stop loss below anywhere around this, what I perceive to be a 4-hour order block. I can set my stop loss below there, and if they do something like that, well, again, we can go for another 250 to 300 or 400 pips, right? That's the way I view the market now, all right? And this is something that is quite possible, right? We're just going to be trading in one direction. And bear in mind something also, these trades take days to play off, right? As you can see, I would have annotated here 11 days to our target, right? That is from the entry, which was on June, the 19th of June, and of course today being what day is today? The 1st of July. Right? Roughly 11 days for this trade to hit our target, right? Now you always have to take that into consideration, that this intraday trading is going to take a couple of days to complete, right? This is This here can also take a couple of days to complete. Sometimes when the volatility is nice, these type of trades can take 3-4 days probably, depending, sometimes less, sometimes more. But we also have to consider also being in drawdown, right? This is something that a lot of traders do not like to see, which is drawdown, meaning that you're going to go into a trade and all you want to see is profits. But in reality, that is not how the market works, right? If you happen to get into a position, yes, you can get pushed straight into profit, which happens often, right? But most of the times, market makers need to come and collect the liquidity that they have. They create traps for retail traders, and those who are unaware may actually go long and get taken out, going short, and then they may actually go short when the market makers are just essentially, creating their structures to be able to push price in their favorable direction, right? And by the time they actually push, as you can see by this large volume candle here, they're just going to continue going. And by this time, most retail traders are unsure if to get back in or if to stay out. That's why they do it. That's how they make the money, really and truly. That's why these candles are printed the way that they are, right? They're taking everyone's money who doesn't understand the structure of the markets, right? So, trade management. What went on here is that I simply, once this structure itself was created, and price was, I think it was somewhere around here, I finally moved my stop loss into profit, right? As you can see, I annotated it here. I moved my stop loss, which was at the bottom here. I moved it right underneath the low, right? I moved it right underneath the low of this structure that they built up right here, and price continued, right? I believe when price was also around this vicinity, I moved the stop loss again right below the low of that structure. Why did I do that? Let's delete this. Delete this. I did that because if price was to come down, well, let's not do that. If price was to just, make some sharp moves and do a structure, something like that, what would have happened is that I would have netted roughly 170 or 175 pips. I might have put it around 175 pips, right? That is still a win. That is still profit in my personal account, right? It's trade management. It's a business tactic, right? That is so that, because what can happen, all right, and what has happened to me in the past is that let's just delete this and this. What can happen is that sometimes they can drive price all the way back down to your entry. And if you do not either book profits, it's not nice personally to see it's really not nice to see volatility goes all the way to 300-400, even 500 pips, which is something that I will show to you in another pair, right? When I get to that, GBP NZD, right? Price can go 500 pips all the way to 500 pips, and if it is you do not manage your trade or you do not make any adjustments, it can come all the way back down to nothing, and then you leave with nothing. Then you're wondering if you are in the right direction or not. You start to question, what is really going on here, right? So we want to always manage our business, right? Trading is a business first, so always manage it that way, all right? So we came out with 312 pips roughly, right? So that is good for this particular trade. Let's go to another pair. Let's go to USD JPY, and this was a lovely trade. I think this one netted me how much? 400, about 400 pips, 477 pips. This UJ netted me. Now you can see two lessons here. Let me just make this a little bigger. Let's reset the screen. All right, you can see two lessons here. One, this showcases why we do not want to over leverage, and we don't want to put too many positions, especially if it is we are unsure of what can happen. I had an idea that price could have actually gone higher to sell, like to go short, right? Which is one of the manipulation tactics that they do in the markets, level 1, level 2, and level 3, right? But I was at that time thinking this was potentially their level 3, and I set a sell stop, and they wicked me in and pulled me straight, they pulled the carried price straight into, to the moon, as they would say. But of course, they eventually sold off, and this was ideally where I would have loved to get my short entry, but I did not proceed to get in the position again. I set out again, be patient, all right, because there is always going to be another opportunity that we can gain some insights from. And what did I do? When this happened, I actually set this order up. And let me show you, this is a key example as to why patience really pays, right? The idea was to go short from, let's use this and let's put this here. The idea was to go short. I was looking for a structure, something like this. I was looking for them to come and finally go over. But the thing about these markets is that they manipulate these markets, and they're not always going to give you that ideal structure for you to get into the markets. So you have to be a little bit adaptive to what it is they are presenting to you and me, right? So I set the pending up and I left it, and this happened the 13th of May, right? The 13th of May is when I set this pending up, and only on, let's move this so we can get some clarity of the date. Only the 23rd of June is when this position got executed, and I didn't even have to worry about all of this. Did I miss a trade? Was I in the right direction? Was this even worth it? Yes, it was worth it, right? Because in this case, I would have risked 122 pips, right? But as we can see here, I would have netted 477 pips, so that's roughly 350 pips I would have yielded, thereabouts, give or take a couple pips, right? So I still made bank, right? So if we do not over leverage, right, if we make sure and we manage our money and then we manage our risk, which this showcases to us, once it is we manage our money and manage our risk, at some point in time later on, I could have gotten back in here, it could have been anywhere. The point is, I manage my money, I manage my risk, and I did not get upset when it is I got stopped out, because this is again part of the business. We are never going to get every single trade correct. So this was essentially a lovely takeaway. Now again, trade management, right? After price push, roughly, let's see, after price push 317 pips, there was a small retracement of how much ever pips, and price push roughly 394 pips. And only around this time is when I finally took my stop loss from here and I placed it here, right? That's trade management. Again, if price was to do their fantangolistic thing and they were to knock me out before price actually rolls over again, how many pips would I have netted if they had kicked me out before they actually continued to go in the favorable direction? Roughly 175 pips. That is still bank, right? So I'm not upset by seeing some of my positions that I would have adjusted my stop loss too early on, because guess what, some of the cases, right, not trying to revenge trade, some of these positions that we place here, even if I would have gotten knocked out here, sometimes they would give us a structure, or let's see, I could have gotten in another position somewhere around here, right? Because what could have happened is that, I mean, you would see this after, you're tracking these pairs for so long, you'd start to see these things itself. They can come and take out the highs or orders that would have been pushed there. People who were looking to buy, they would have actually activated their buy stop orders, and then they would have actually carried price lower, right? And this is something that we see often. Once you are tracking these pairs, you would see these things, you would get accustomed to it. So your emotions are more in check when it is you are doing this on a regular basis. Yeah, you understand the manipulation tactics, you are patient, you are disciplined, you are obedient. All of these things are traits. This is transformation. And all of this, what I'm talking about here, transfers from the skill set into your life. And that's the lovely part about this skill set. That is why we're going to be diving deeper into blockchain technology. Yeah. So let's just delete this and just delete this. So trade management, it's worth it, right? So we can either bag pips, and once it is we have adjusted our stop loss into profit, whatever happens happens. We have a target and we leave it. If we get stopped out, we say, okay, what time of the week are we in? What time of the month are we in? Is it possible to actually get in on the trend still? Or are we just going to wait for this entire level, which is what it is, this red box is. This is what I'm considering one of the levels inside of a cycle. Right, this is what I'm looking out to happen, and I mean there's still so much more room to grow. Right, this is just one level. There's a potential 2 and there's a potential 3, and as you can see, when they happen, right? You can see this as a clear indication, right? Level 1, level 2, level 3, right? The next one here, and they mix it up from time to time, level 1, level 2, and level 3, right? So if they do these things on repeat, whether it's bullish, and let me just showcase this to you. Look, one here, look, and let's change this to a long, level 1, level 2, and level 3, right? So if they are doing this on a regular basis, this means that it's consistent, right? It just takes time to understand the dynamics, and we adjust ourselves with our patience. Right? So trade management is coming along really nicely with these intraday trades. As you can see, 8 days to reach our target. Not bad for bagging some pips, right? Banging some pips, right? And let's go to our next pair. Let's go to GBP USD, right? Again, we can clearly see this was a lovely twin trade, and I would have netted, I think, on this position, right, roughly 405 pips, and this one would have netted 325 pips thereabouts, right? This closed off today. And again, trade management, you know the rules, or you know the drill thus far. Manage a trade after price, like the volatility came and kicked in, right? After price made this structure right here and started to go bullish, or at least continue the volatility, I adjusted my stop loss from both positions, right? Both positions, I adjusted my stop loss into profit. Let's put that there, right? So that again, if I were to get stopped out on this position, I would have netted roughly 100 pips, and on this position I would have netted roughly 175, 78, 180 pips thereabouts, right? That would have been great. That would have been profits booked regardless of the situation. And again, I would have just had to look out for another opportunity to succeed. All right, now this is something that I'm potentially looking out for. As I was mentioning about EUR USD, they can drive the markets for between let's say 250 pips to 500 pips. It's a lovely range for GBP USD and EUR USD, or some of the major pairs. It's a lovely range. You can look out for that for between 250 to 500 pips. Right, and once it is you understand the structures, you know what it is you can get from it. You're not trying to extend yourself too much, and you're not going to be taking too little, right? Unless you're maybe just day trading, right? And we don't really day trade that often. It's not worth it. Yes, you can make your returns, but it's not always worth it to try to trade, up and down, down today, up the next day, down the next day, it's better to just trade in one direction for a period of time, right? And again, this is what I'm potentially looking out for with GBP USD. If they do that, hey, you know, money in the bag, right? And if they don't, okay, and they continue going volatile, no problem. We again will look out for another structure to see how they are playing this out, right? Because as you guys are seeing here, again, they just repeat, you know, these 1, 2, 3, right? It's fractal, and out of this 1, 2, 3, you can see number 2. This here was number 1. All right, you can see that here. This was number 1. Let's just title this as 1. So you can see these things before your very eyes, right? 1, 2, and potentially 3 somewhere around here. And after this third one has been created, we can maybe look for a level to probably do something like that, right? They can do it before. Let's just get this here. They can, this will be really nice to see, and then they can maybe create a base structure to go up like that, right? That's the idea. But of course, we need to get more data printed before we can make these decisions, right? We are trading with informed and educated decisions, right? Knowledge is power, and this power will pay you, right? It just requires some patience, right? As you can also see, some annotations for you guys for the entire year. Whoa, yeah, okay, yeah, right? For the entire year, we have quarters labeled out, right? Q1 of 2025, Q2 of 2025, Q3 of 2025, which is what we are just approaching, or at least we are in, and then Q4 of 2025, right? So having an idea of the structures of how they play out these moves will give us a better idea as to what it is we can look out for. We can be trading for instance, in this case, we can be trading bullish for 3 months, right? Let's get this here. This dotted line is the 1st of March, and then this dotted line here is the 30th or the 1st of July, which is today, right? And they were just basically bullish for almost 3 months, practically 3 months, right? At the start, I remember trading somewhere in here or something like that, yeah, from the bottom. Anyway, you can see that at the start of Q2, they literally just sold off. They liquidated so many accounts. They blew so many accounts, right? People were just going to go bullish. Let's zoom into this so you guys can see this for yourself. And I mean, on the 4-hour time frame, it looks, you know, it looks big, but on the higher time frame, peanuts. It looks like peanuts, right? So many people got caught up in this, and then of course they just started to go bullish, right? They went bullish. Lovely structure, right? And after you get an understanding for these structures, you see this manipulation happens, you know, and you can book, you know, you can do this for yourself. It took me some time, yes, but I mean, you can do this for yourself, all right? Just understand the structure and just imagine this going across into blockchain technology, right? Let's go to something like BTC, right? Just today itself, I was looking at this structure, and even though I do not day trade, I drew this out because of how the market makers make, you know, how to print these structures itself. I saw this as a structure, as where they manipulate the market, and this was a lovely structure from, I think, 2 days ago, 3 days ago, 2 days from Sunday. So from, and this was Bitcoin. So this was set up on Sunday itself, and then they just went short. But when I came to the markets today just to observe what was going on so that I can collect my data for my Pipex, my data collection center, I saw this happening and I was like, well, this is going to be a short position, and yeah, they sold off. So this would have been a day trade. This would have been considered a day trade. Of course, we don't always trade on a Tuesday when it comes to day trades, right? But just the structure alone was revealing, right? So it happens on cryptos too. So of course, this is just an idea as to what is going on in the markets. Let me go to GBP NZD as our final topic to speak on. Let me just go to the 4-hour time frame now. You know, this is what I was mentioning about. Sometimes it's wise to adjust your stop losses into profit, because this trade ran 500 pips and eventually it's a good thing I closed it off, at least in some profits. But I said I was not going to wait for price to continue volatile, because I was a bit mixed about what was actually showcasing what they were doing right around here, because I saw this structure, this peak structure right here, and I said, well, you know what, they can actually push that lower for a couple hundred pips, because I have been observing GBP NZD and EUR NZD and the volatility that they bring to the market. I've been observing that for some months now, and sometimes they do this. So you can see here they ran for 500 at max, maybe about, at least from my entry, 525 pips roughly, and then they came all the way back down. They came all the way back down, right, to your entry. And in this case, I saw them, I saw the market makers, driving the markets. The reason why I placed this secondary trade here, it was because I saw that they were going to make a structure 3 pushes, and I decided to say, well, whenever they do their retracement, I'm going to place a buy stop so that I can actually continue the move. That is why you're seeing this this move here. I believe I'll put the screenshot in the video. At least I take my screenshots, right? I was looking out for this type of structure before price even was down here. I think I had that screenshot of what it is I was looking out for, and provided that they did that, I was going to trade it, right? And price went 500 pips and came all the way down to back down to 500 pips, right? When this got kicked in, I think this one was closed out at a minor loss at, yes, it was closed out at roughly 97, so yeah, let's call it 100 pips, right? So even though I may have made roughly, let's see, 192 pips, I basically broke even with this gain here. But with this lesson, I came up with roughly about 100 pips back, right? So this is currently what I'm looking out for, to see if they are going to continue this move, right? Again, I'm showcasing to you guys that these things, this trading can, it's a patient thing. But the thing about it is, when you understand the structures of how they are manipulating the markets, you can't just set your pendings up. You do your analysis and you understand what it is you're seeing, what it is you're looking out for, what it is you are potentially expecting to happen. You can set your buy stops up or your sell limits or sell stops up, and you just go about doing your daily routine. If you have a business, you can run your business while this is taking care of itself. If you are working, you can take some hours either at the start of the day or at the end of the day, or at least over the weekend. You can just look at how the markets are setting itself up, place your pendings accordingly, and leave them, right? In some cases, it may be better to set your pendings maybe or in the middle of the week, depending on what it is they are presenting to us. And in some cases, you can just set them, and whenever whenever price is ready and the market makers are ready, they are going to set, they're going to move price and they will activate the pending orders, which is essentially like automated trading, right? But they are going to activate your pendings, and according to what it is they're going to do, chances are they are going to play around your entry sometimes for days, It takes a while for you to really get an understanding of when to place your pendings, but once it is you do, you can count on the volatility over the next 15 days to potentially 15 or 20 days, right, to actually kick in for you to actually see your gains from that particular trade idea, right? Now you notice that I spoke on multiple pairs, right? We have many pairs that we trade, right? This is me applying the principles that I learned from the institute, right, which is building a portfolio, right, where we go long and we go short on different pairs, inversely correlated or correlated pairs, either or, right, and that creates absolute returns, right? Why does it create absolute returns? It's a simple idea. Because you have one pair going in, let's say we have one pair going in this direction and you have another pair going in this direction, right? If both of them are going in that direction, right, let's do a long here and let's do a short here. If they are going in that direction, well, you are in profit. But what happens if one of them decides to actually go and stop you out, but this one actually does a move like this? Well, you are essentially in profit on one pair, right? If you actually get stopped out before it decides to go, bullish again, right? That can happen. But what happens if you essentially have more than one pair going in that direction and one pair going in that direction, right? Let's even out the odds, right? If you had more pairs going in different directions and this one basically did something like this and continues going, and this one continues going, and then this one stops you out, and then this one does something like this, right? Now let's put the orders up so you guys can see this is what long, right? So this was a long position and this was another long position. Let's adjust the stop losses so that you guys can understand what I'm doing here, right? So let's go for your shorts. This one was stopped out before it actually went your favorable direction. This one actually was still in profit because they retraced and continued the trend in your favorable direction, or at least their favorable direction, because the difference is we understand what they are doing, so that is why we are going to be consistently profitable while understanding the dynamics of a portfolio. Lovely concept. Most people, or not most people, but there are a lot of traders who like to focus in on one or two trades, or pairs I should say. I was one of them. But when it is you understand the structures of the markets and you realize that you can apply it on multiple instruments, right, it is wise to have a diversified portfolio. This will reduce one's exposure while also maximizing one's gains, which creates absolute returns, right? So in this case, let's get this here. So this one, you got a win. This one did not work. This one win. This one did not work. This one win. This one win. Not necessarily a win, just lessons with percentage increase, right? With a portfolio like this, well, this just means that even though you are getting your lessons with a percentage decrease, the ones that are actually making bag for you, you're going to actually see those fruits. And again, when all of this has, whenever these trades have actually all been completed, which is what I would have done by, let's go to EURUSD. When this has completed, and these positions have been closed off, I can sit back and I can wait to see what has been going on in the markets. I can set some alerts up on CTrader, right? That's what I use for IC markets, and I can also trade directly from TradingView through IC markets CTrader, right? So that's one of the unique abilities about IC markets and TradingView. They are partnered up and we can trade directly from on these charts here, right? I don't need to go to MT4 or MT5, and there's just a little difference there, but not a problem, right? And as this has completed, and let's see, GBP USD, right? USD JPY and GBP USD, as this part of the portfolio has been completed, I'm patient to look out for the next train ride, as this week is the first week in July. NFP is going to be Friday, so some structures like this can play out, right? This is where the manipulation and all of these things come in. So I'm glad with booking my profits after about almost 2 weeks of waiting for my setups, right? And then I'm going to look out to see what's going to be happening next week, and we'll see how that's going to play along, and accordingly I'll be able to either, if they are going short, I may not necessarily be interested if they are going short, because this can be just a move, right? So something like this can just be a move that I can probably aim for somewhere around here, and then eventually they could come and kick me out. I'm not going to look for shorts. I'm going to be focusing on going long, right? Trading in one main direction for a period of time. That's the lovely thing about this skill set. And then again, on top of that, we can live our lives from anywhere or any part of the world, right? Once it is you get the skill set and you understand it, it's just a matter of compounding your discipline, compounding your understanding, compounding your obedience to your plan, right? It's a business and it's a structure. There's a structure for it. It's not just only about the dollars in the account, right? Are you transforming into the person that you need to be with this skill set? The answer will be yes, you are, right? So I just wanted to speak about trade management and transformation, right? So let me just put a little plug inside of here. Pipillionaire.com is something that I'm passionately working on, right? I'm building it from the ground up. I'm using my knowledge and understanding with web development, and I'm now diving deeper into blockchain development, because I truly believe we have something unique here where the digital economy is concerned, right? Digital well decoded is understanding about our financial mindset, and we want to reprogram that, but we also want to learn how to steward, right? How to govern our wealth, right? So feel free to check out this website, right? I have blogs that you can look at, right? I have a connect tab, and of course I have some other details that you can look into, right? As I'm building this thing out, right? We have a fact page, right? It's live. If it is you have any other questions, feedback, you can surely come and join our mailing list, right? So with that being said, I thank you for the minutes that you have spent with me. It is truly rewarding to be able to develop and grow in this space, and to also be able to share insights, not just only about trading, but about transformation. And I'm sure that you are transforming into your best version that you have ever seen in your entire life. All right, so with that being said, I'm Leslie Sampson, aka Mr. Pipillionaire, and thank you for tuning in. Until the next episode, stay awesome. Have a great day, Royals. Cheers.